Yeah. Okay. Hello, guys. Welcome to my channel. Sorry. In this video, we'll be doing top-down analysis on USD card, and I'll be using weekly for higher time frame and lower time frame for hours. So, and if you are also doing your top-down analysis from daily, you can be using one H for your entry. So, and if you're using 4H, you can use 15 minutes. So, and so on. So, so let's dive into it. As you can see, weekly time frame is telling us something like bullish, bullish momentum, and some people will still say this is a consolidation, but this has been happening for since 2015. So you see there is a very big consolidation. So, but it depends on the perspective. So, if you are to do the market structure mapping, let me give you the criteria, the backup. So, we want to see a situation whereby the market will do this, and when the market take at least one of these, then break above, that's when we confirm our break of structure. We want the market to repeat the same process, then break above, that's what we confirm our break of structure. Any break below here, close candle, we have change of character, and that shows that the market is telling us that it's going down. So this is not break of structure. That means we need to wait for market to create value pullback, then close below before we mark break of structure. So we understand all that is in my previous video. We can watch it, you can watch it and you will see. So we are applying those criteria to uh, card JPY and USD card till the entry time frame. So as you can see, we are bullish. So if we are to mark, we can mark like this. Let's start from this obvious level that the market created bullish break of structure. So you can see we have break of structure here. Hold on, guys. So we have break of structure there. So, and as you can see, why is because market created something like this, push up, push down. Sorry, market created something like this. We had a push to the up, push to the down, then push up, then came back for it and break up. So this what make this level to be break of structure. So it means that we have what we have our level that market must not break through here. So and the ski market keep going up, and when market got to this level, market repeat the same process, push up, small pullback, push up, then come back, then boom. So you can see, so it means that this level is the low that the market must be protected, and this is going to be our high that the market just confirm break of structure for. So you can see we have break of structure from here. So I will use B to mark it. So it means that this low must be protected by all means if the market want to continue the bullish momentum. So as you can see, market did the same here by doing what? By creating a push. This is the recent pullback, and the same thing happens and market break structure. So it means that this is the break of structure that the market created. So we have this like this. Remember, this is in weekly time frame, and it means that this low must be protected. So in weekly time frame. So as you can see, market change character here and push down, break change character again like this. That's break of structure. After market change character, where is the break of structure? This is not break of structure because if you look at this side, there is no valid pullback for market to take out. So this is just a break to the downside. So, and as you see, market did what? Market create this low, and market create valid pullback here, which means this is the last pullback that the market created. And what happened? We had this. So as an inducement, and this is going to be our high. This is going to be our high. So And as you can see, market did what? Market took out inducement, went to extreme. This is the extreme order block, and market drop to give us what? To give us break of structure. So, but this break of structure is not confirmed, because if I stretch it, you can see that this is just a sweep. So it's like liquidity sweep. So let me check it well. So yes, it's like a liquidity sweep, and market, instead of us to have break of structure here, we only have liquidity sweep here. Because what happened in another scenario is market will sweep, then push back, then now close back. Then that's what will confirm our break of structure. So as you see, market did what? Market went back to this high. Remember when I show you in the bigger time frame, market is doing what? Market is doing a big ranging. So market is ranging from the big from the big from the bigger look. If you look at it, it is ranging. That's why market is doing, when market is ranging, market will not break structure to the up, it will not break to the down. So that's what ranging is all about. So as it is now, what are we looking for? Market sweep this high. Or I think market, yes, market now close above this high. So if I open it, if I expand it, you will see that this candle close above this high. So it established the fact that market says it's not coming down again. So it means that market has changed character to the upside. So you can see market has changed character to the upside. So it means that this low will represent our new low, like this. So it means that our trading range is from this high to this high. So now that we have break of structure, where is our inducement? And if you can look closely, you can see that when market got to this level, pull back and now broke this structure. So it means that our valid inducement is in this place. So now we have valid inducement in this place. So it means that this high has been confirmed. This high has been confirmed as our high. So it means that we are ranging between this high and this low. So if we are now to mark our POI, then you can see that this is the first POI. We start from the bottom. This is the extreme POI that we're expecting the markets to react from when market gets to this level. And as I said, it's only two POIs that has high probability to hold in this market. The rest is smart money trap. So, and if you see, some people will mark this as a POI. Some people will mark this as a POI because this is the POI, which is the other block. So this one has been mitigated, so we can't use this again. So this one, no POI here, all mitigated. You can see they have been mitigated. Everything has been mitigated, so there's nothing. So we only have these POIs. Sorry, we only have these two POI that is unmitigated, but this is an SMT. So if market fail to hold this level, then the next high probability level that the market will respect is this level, if this trend want to continue. So I've teach this in my previous video, how to identify the POIs and the POIs that really works, the only POIs that work. These two is it. So if you have 5, just the immediate one below your inducement has the like 60% probability of holding, but if you fail, this has 80% probability of holding. So this is what we call decisional, this is what we call extreme. So now as you see, market is responding to our POI, weekly POI. So what are we supposed to do when market gets to this level? Then we go to 4 hours, because we are using weekly and 4 hours. Then since we are expecting this level to hold, we want to go to 4 hours and do what? And start looking for buy momentum when if market creates buy momentum. But in this video, I will explain something briefly. If this is your POI, higher time frame POI, and you go to 1 hour, then the lower time frame, and market is giving you something like this. this is a structure, and market is doing something like this, and market mitigates your POI. Remember, this is a structure, and in a real sense, this is supposed to be what? This is supposed to be your change of character. But because market has mitigated your POI, the higher time frame POI, we use the immediate level, immediate pullback that's supposed to serve as our inducement as a chalk, so that we'll be able to enter this market as soon as early as possible. So if market now do this, we are considering this as a chalk, as a change of character or market structure shift, not this one, because this is for the main structure. But for the fact that we mitigate the higher time frame POI, we use the immediate pullback as a change of character. Then we can now look for a situation, maybe market push up like this, then give us inducement, then we start looking for buying momentum to the up. So that's just it, so that once I'm executing this, showing you how to execute in this particular video, you'll be able to understand. So, and if you have any question concerning my video, any explanation that is not clear, just feel free to drop the comment. So as you can see, when we get to 4 hours, you can see that market is giving us bearish momentum. Market keep giving us pullback, and this is the major one. So this is the last pullback that the market created. So, and you can see when market take out this high, this level, it means that we had change of character, so which is also market structure shift. Why? Because markets responded to higher time frame POI. So the first attempt, this level will have become our market structure shift, but as you can see, market refused to change the character and still drop and created another opportunity. So now that we have market structure shift, it means that if the market wants to respond, this low must be protected. So now we have market structure shift. First thing we look out for in 4 hours is to look for our inducement. If you look at this is where we have a valid pullback, which is our inducement. Then what are we going to do? This is not a valid pullback. You can watch my video for better understanding. Then we only have extreme POI, and you see how exactly the market comes here. So in this case now, we position ourselves here, give the market small room to breathe, then we enter the trade, probably target 1 to 3. So, and you can see market did exactly, market gave us this about 1 to 2. If you had to enter the trade about 1 to 2, then boom, came back to your entry. Maybe you'll have had break even here depending on how you manage your trade, but we are not talking about the trade management and entry here. We are just doing top down analysis to see how the market really reacts. So as you can see, after we break this structure to the upside, so then it means that this is going to be the low that must be protected. So now this low is our low. So, and let's see how the market keep going. So in this case, where after break of structure, what's the first thing we have to look for? Valid pullback, which is inducement. So if I can look at it, we have a very tiny one here. So I know this might be a little bit confusing, but you just have to watch my video on how to identify valid pullback and how to identify inducement. So then if we are to come here, this level is supposed to be our extreme order block. Then where is our next order block? This level, this one, supposed to be our order block, but look mitigated already. So this is supposed to be our order block, but look mitigated. So, and if you shift it, I don't see any valid order block here. So, but if we want to um, enter the trade, I don't think there is a valid pullback, no valid pullback, no valid pullback. This is the only order. No, this is not valid. So this is supposed to be the valid order block, but look mitigated and it has no fair value gap. So this is where I will be positioning for this trade in 4 hours time frame, and unfortunately market refused to come there and did what? And break structure to the up. So we had a break of structure here, so you can see, so it means that our low has to be here. because this is the recent low that the market just created. It has to be here. So actually, and you can see after break of structure, what are we supposed to look for? Look for your valid pullback, which is the recent valid pullback that the market created before or after break of structure. Then wait for market to come and take it out. Then once market take it out, come here, look for your extreme. I think I will still explain how I pick some hidden PO high that is not absolutely order block. Maybe in another video I'll have to do that. And where is the decisional POI? I think we have this whole candle as a decisional POI. So if we were to pick this, now you see market reacted from here and failed and came down straight to extreme. So if you're positioning here, we had a trade here and target this high because this is the high, but me I target 1 to 3. So but if I'm managing the trade depending on my trading plan, then I can go to the next high break of structure. So you can see that's exactly what market did. So in this case I had this trade exactly like this, but I took out my profit in 1 to 3. Then when market got to 1 to 3 and start pulling back, because I was so confident that this trade is going to do what? It's going to give me, it's going to break this structure because the whole momentum is telling us buying, buying, buying. So when market got to this level again, I re-execute this trade and I still target this high, this 1 to 3. This time the stop loss is a little bit bigger. And when I was in this market, then I noticed something, that market is going in this direction and boom, as you can see, market pulled back and I added another position. I think I explained that in my previous video, in my previous post on TikTok. So look at this, we had a very good trade last week and this is the current situation of USD CAD. So if we are to position again, it means that this low will serve as our low. This level will serve as our low. Like this is going to be our low that must be protected because the buying structure is still valid. And if you are to look at something here, you see the market did a very small pullback here, then it's coming back for it. So it means that this is our what? Is our valid pullback, which we are expecting the market to. This will be our extreme. But based on hidden POI, this serves as our extreme because of what? It sweep the previous liquidity, despite the fact that it doesn't have fair value gap. So but these are going to be our decisional POI, this level, because if I have to look at this candle, I want to see whether this pullback is valid according to my, okay, what's the time? High is 39070, 3907. Okay, they are the same. So and this level is not a valid pullback, so it means this is not POI. So if I to choose another POI, it means that we have this valid POI, then we can shift it to this level because that's where the fair value gap is. So I'll be waiting for this to happen. If this do not hold, then I'm expecting the market to hold from this angle. So the scenario that can happen is when the market, we have just three of, let's say the 3 4 scenario. So if the market take out this inducement and push up, then it means that this is going to be our new level that must be protected. But if that doesn't happen, market push down and continue, then it means we have break of structure. And if that doesn't happen, market push down, push up, then fail, then we are expecting to buy from this level. So this is my view for the next week. These are the scenarios that I will be positioning for, and I will be waiting for market to do its thing. So this is the top-down analysis USD card. If you have any question, drop it in the comment section. If you find value in this video, You can like, subscribe, and follow me for more content like this. And if you still have any issue concerning smart money concepts, my trading, how I perceive the market, my psychology, anything about trading in general, just feel free to drop it in the comment section or find a way to message me. So that's it for today's class. Have a nice day, guy. Bye.